Hello, everybody. Yo, for beginners watching this, I'll try to keep this straightforward as possible. My name is Ernest Collins, and I've been trading for about 30 years. I've been trading futures and options to make a living once I got injured with a serious spinal cord injury. And that's the part of my story that makes it such a great thing for me because I don't know how I would have made a living without futures. So let me go into this. So with futures, see, I was able to manage my risk and actually set a defined risk before I even entered the trade because I could calculate through the tick value exactly where my stop loss would be, exactly how many contracts I should put on, and know exactly what my risk reward is exactly. With options, I couldn't do that because premium and theta decay was always trying to hurt me. But I got very consistent with futures trading, and that's why I wanted to make the course to show people that if you learn under correct knowledge, you'll be very, very lucky at this. So I want to take a little time to talk about this and get more in depth right now. Now, the thing that changed my trading was the divergence trade. That's what I love about futures, is you're able to use indices together to find out divergences in the market. When I trade, I use something called SMT, Smart Money Techniques, which is a smart money tool and a divergence between the the S&P 500, and the NASDAQ futures. I can look at these two correlating indices and find a divergence between the two and get a good understanding of where the indices are headed. That gives me an understanding of what the bias is, and then I can use that to frame a trade off of. Another thing about futures, it's all based off margin. Now, margin might be a scary word. I'm sure you heard of it before, and everybody says, oh no, never trade off margin. But let me tell you, in reality, margin is not a bad thing. Most brokers nowadays won't even let you trade below your margin requirement, which means you'll never be able to owe more money than is in your account. And with futures, you're not actually buying these contracts. You're using initial margin to borrow them. So what's actually happening is when you trade the NASDAQ, one mini contract is $1,000 of initial margin, meaning you have to have at least $1,000 in your account to be able to purchase one contract of the NQ. Now, there's something called micros. There are minis and then there are micros. And with micro futures, that's 1/10 of the minis. So if you think one mini is too heavy size, you don't want to trade that for $1,000 contract. You can trade a micro contract, which is only $100, 1/10 of the size. Now, about the brokers, I recommend using Tradovate, which is one of the easiest brokers to set up for futures trader. I personally use it with most of my live accounts. There's some like Edge Clear, Thinkorswim, but I would say Thinkorswim is the least best to trade with, just because the fees are more expensive. Now, with futures as well, you're able to use funded accounts in prop firms to your advantage, and that's what I do. Now, if you don't know what a prop firm is, they're firms that end up funding capital to new traders to trade with to make their own money. So if you don't have much capital to start with, you can end up paying a short evaluation fee, take the exam, pass the exam, and then they'll fund you up to $50,000 to $300,000 in capital to actually trade with. And most of these prop firms use futures. So you're able to use futures and trade funded capital with them. So I want to dive in and show you guys how exactly to calculate the risks when trading futures. I just look at a blank chart here, and what I want to show you guys on TradingView, you have a tool to the left, a long position, a short position. Now, since NQ and NASDAQ and other futures are based off of a tick value, you're able to measure exactly how much you would be risking for a stop loss. Now, for example, if I was to take a long right here on the NASDAQ, I was to put my stop loss at this recent low to the left. And let's say I want to be targeting the high to the left of us, right? These highs right here, I can put this on the chart and I can say, okay, I have a 2 risk to reward. And right click this and I create limit order. If I'm trading one contract, I can see exactly how much my take profit would be and exactly how much my stop loss would be. And again, let's say my max risk is 5,000. Now, most of you guys, I know it's, let's just say it is. you won't be risking 5,000. Just depends on the size of the account. But if my max loss is 5,000 for one trade, what I'll do is I'll adjust my size to figure out what my sizing should be based off my max loss. So for example, in this case, I would trade 6 contracts because I'm risking 5,000 and it's based off of the setup, which is most important. You should trade based off of the actual setup itself and not just a fixed stop loss. Because with options, when you're basing your stop loss off of 20%, decrease of the contract premium, that's what's happening, during time. And you're trading off of the premium and not the actual chart itself, which is showing you the decision you should be making. The chart shows the decision. So when you're able to use these tools, you're able to have more consistent wins and more consistent losses, keeping the losses small as possible because you know exactly your max risk before entering the setup. That's key. If you guys are still confused on how this whole futures thing works, I don't blame you. It took me a while to fully understand it. It was like another language, and I just kept watching and listening, and then it clicked. Now, I highly recommend that you watch this a couple of times until you just start to click a little more. And if you want to learn more about my system for winning and how I make money in futures, then I made a video course, 3 levels, the foundation, and some advanced levels in marketmovetofreedom.com. I even broke them down into sections so that those who don't have a lot of money can buy the sections of the course. Build your knowledge up, because without that information, you're just a pawn. They taught you what they wanted you to know. They gave you the wrong information so that you would not prosper. It's time to get paid. I will talk to you soon. EB, Market Move to Freedom.
On this Discord server, I plan to create a small community of people I know and then let it grow from there. I'm not going to be talking all day or doing anything or trying to milk money out of folks. I sell 2 things, my course, and then I sell my indicators. And after that, if you learn something or profit from something I put out here, good. If you bought the course or anything, then you know that you helped the homeless or somebody that's sick, because that's what I do with the money. So get your game up, download NinjaTrader, get the simulation, and get to practicing. Talk to you. Peace.
Every day the market moves. Is the market moving with or without you? Yes, the wealth is unlimited. The market moves to freedom.